So that official news just coming in, a 25 basis point cut as
Yeah.
expected by virtually everybody. Sorry, Ian, you were saying.
Well, back in mid-year, the core inflation figure was sitting at 4%, and the Reserve Bank in November really decided to cut it back to 3.4% as a forecast. When it was finally delivered, it came in at 3.2. And if you take each of those quarterly figures going back, to this time last year, there's been a consistent drop in the core inflation figures and quite a sharp drop as well. So it's gathering pace, that's the thing. So if the Reserve Bank didn't cut today, they would run the risk that inflation would be going too low. And I know that there's this argument about unemployment, but the Reserve Bank has two mandates. One is to maintain full employment and the other is to keep inflation within the target band. Now, because we've got a strong jobs market, that is not a bad thing. That's actually quite a good thing. Every other indicator of the economy is weak. GDP growth just barely crawling ahead.
So, cut today. What does the future look like?
Well, you'd have to see what they say, but the pricing at the moment is that there'll be another 2 cuts this year. So probably one middle of the year, one later in the year.
Can we just remind ourselves what interest rates have been doing over the last little while? We have a graphic which shows the curve and the line of what's been going on. If we can bring that up, I think we have that somewhere. There we go, 10-year chart. Can you just talk us through that pandemic? Obviously very clear there.
Well, yeah, what we saw, look, for a long period of time we had inflation actually below where the Reserve Bank wanted it to be, and rather than really cut rates, they left rates, the argument is they left rates too high. This is the Reserve Bank. Now you can see that big flat line in the middle. That was that period where the Reserve Bank did nothing at all, even though inflation was barely getting to 2%. And then, of course, as the pandemic came to an end and we saw inflation when the pandemic started, we saw inflation really drop away. The Reserve Bank cut to emergency levels there and sat there, and then unfortunately they waited a little too long before they started hiking rates, and they did it at an extraordinary pace. Okay,
let's take a look at inflation then. You were speaking about the core inflation rate being at 3.2%, slightly above the target range, but it will, falls in inflation will accelerate. You were saying this is the last few years of that number there.
Yeah, is that core? It's a bit hard for me to see that. That's probably the Consumer Price Index.
Yes, it is. Yeah.
So that peaked at around about 7.8%. And so we're now down to 2.4%. So that, as the CPI, and that's the official number for inflation, from 7.8 down to 2.4, the Reserve Bank wants that to be between 2 and 3. Now, the reason they're focusing on core or underlying inflation is because the government decided to put some subsidies through there for rent, for energy bills in particular, and that skewed the CPI figures a little bit. And so they were focusing more on the underlying rate. But the underlying rate has been coming off at a fairly rapid clip since, particularly since the middle of last year. So
borrowers, of course, will be relieved to see this rate cut, but it doesn't mean much unless the banks pass it on, will they?
There's that, but the other thing is inflation isn't measuring the cost of living. Inflation, things are still going to be horribly expensive. What inflation tells you is the speed at which prices are rising. So prices are still going to remain horribly expensive. They just won't be rising as quickly as they have been in the past. And so the cost of living crisis will remain a crisis for quite some time until wages growth starts to catch up. And that's possibly not going to be until 2030.
But people should feel that they have a little more money in their pockets because they're not paying as much for every month for their mortgage. If the banks pass it on, there's no question that they will pass it on. It would be very unpopular.
I don't think there's any question they'll pass it on. Some of the banks have suggested that they're helping their clients out, those really struggling, by putting them on interest-only loans and doing all sorts of things to avoid having people default on the loans. So I think the banks are quite mindful at the moment that they want to keep their loan books intact, and they do not want people defaulting on their loans. So they've gone out of their way to try and avoid those kind of problems. So a rate cut coming through at this point they would certainly be passing it on. Gee, you'd be unpopular, wouldn't you, as a banker, if you didn't pass it on?